crisis, and natural gas prices have been very high last year in the European Union. And although we see a downturn right now in terms of prices, we're still far above an elevated price what we've seen historically. And as you can imagine, chemicals, and in particular petrochemicals towards the polyurethanes, they require a lot of green electricity, fair prices, and they are quite a substantial part of the total costs of raw materials. So therefore, what Chemical Market Analytics is expecting, we see less investments happening in Europe in the way forward, 2023, 2024. Vice versa, in contrast, you can even say maybe we see some further rationalization on the isocyanates, maybe on the polyether polyol side, and this will play an important role going forward in terms of the global supply, but also the European supply and demand perspective. The main ingredients for polyurethanes are propylene oxide, the polyether polyols, and the isocyanates MDI and TDI. And actually those three large chemicals, they are right now in an overcapacity environment, not only because we have seen so much in terms of new investments happening also in Europe, but mainly in mainland China. But on top of that, it's because of low demand and a very low and soft environment where we are right now in. So depending on the speed of rationalization and also in terms of how demand will develop going forward, and we do expect 2024 to be the tipping point for most industries, that we do see a recovery in terms of demand, you can expect that afterwards the operating rate and therefore also the profitability will improve again for the isocyanates, in particular MDI, TDI with some delays, and then on polyether polyols as well as propylene oxide.